investments are subject to market risks. Do remember that we are not operators and we don't run the market or don't time stock price movements. We can only make a suitable prediction based on our positive mind frame, discipline, instincts, and judgment. Please know very well that all research analysts or investment planners, howsoever smart they may claim to be, are ultimately human beings, and there are chances that some calls may not be profitable to you, as sometimes market movements are speculative and completely out of the box, and based on some sudden news or event or some black swan event that can completely take you by surprise without allowing sufficient time to act. Here comes in the need of an investment planners who can manage risks for you and your capital. Nobody can mitigate risks 100%. This is not a fixed deposit. We can only reduce the risks by our stock selection and diversification. Remember that all stock markets investments are subject to market risks. So please consult your financial advisor before investing on these calls. A standard accuracy, that is the benchmark, is 2/3 of the calls, roughly 65 to 75% max, through any genuine portfolio investment planning service. All those boasting of 95 or 100% accuracy they're completely fake news and need to be asked as to why they are not the richest person in the world now if they generated 100% accurate calls. All the best and view the video entirely to get the best out of it. Let's start the journey to become rich with the mission to invest in the best of health stocks that are available cheaper post the coronavirus market crash. Please don't forget to subscribe this YouTube channel and press the bell icon to get all notifications at the right time. Come all of you, let's journey to the riches. Fundamental analysis. Strong balance sheet. Bullish and confident management looking to grow the number of malls all across the country. High cash flow growth at malls with India having the youngest population in the world. Currently, panic selling gives an opportunity to accumulate this stock at a reasonable level following Warren Buffett's principle of buying fear and selling greed. Technical analysis. Currently, stock is in a bear market phase and making new lows every day with reducing volume suggesting downside may be limited. The negative trend line has given way to a rectangle pattern indicating consolidation and accommodation. Mall opening news can trigger an upside post-lockdown lifted by the government with heightened go with immediate target being the 180 DMA within the range of rupees 12,000 to 1,200 to 1,500 levels. Past year's performance of the stock price in the stock never showed a big downside. It has a consistent trend to play the trend and reward the investors and traders regularly. Fundamental analysis. Government hell-bent to sell off this profitable PSU and raise funds to boost infrastructure of the country using the funds. Currently, poor demand of fuel will lead to a price crash due to panic selling post the Q4 and the subsequent quarter results. Use that as an opportunity to accumulate on SIP basis on every dip. Regularly pays good dividends to investors. Technical analysis. It looks like it is consolidating now in a rectangle pattern and a double bottom is in place with April 2020 price movements which indicates up move. But that should be limited as bad quarterly results loom. Its fall are slow and hikes also are slow compared to the market movement as it is a medium beta stock. High volume can be visible once these investments look likely in near term. Fundamental analysis.